Welcome back to another video. In today's video we're going to cover what RSI is and how do we use that in trading. We're going to cover everything about RSI, how it works, and the important factors of RSI, so please stay tuned. First things first, please pause this video and read the disclaimer below. Once done, please continue with the video. I'm hoping that you guys have read the disclaimer by now and understood it, so let's get started. So a lot of guys have been asking me what RSI is and give us a proper detailed video of RSI and how does it work. So I've put this together for you now, for you guys to know what RSI is and how does it work and everything about it, how important it is, the way it benefits us, how do we use it, and there's loads of information. So please stay tuned and gain advantage of this information, put it into your trading, and hopefully you will have a better edge in the market once you've done that. So what is RSI? RSI is basically a momentum oscillator that measures the speed or the change of the price movements. A lot of traders like to use it to identify trends. It tells us the main things, for example, like whether the market is oversold or it's overbought. It typically ranges from a scale that's 100 and to 0, so it goes from a 0 to 100. Again, I'll be explaining on how that works in the next slide, so please stay tuned. And by the end of this course, you'll have a much better understanding. RSI is usually typically a 14-day time frame indicator, or an oscillator as most guys would like to call it, and you can use that in your trading in various ways, and it could play a crucial part in your trading depending on your forex strategy. So the importance of RSIs, there's various ways that this could be beneficial in trading. RSI, I've never used to use it that much, but then I started using it and it did work really well for me. It works really well as of now, as we speak of today. But that's based on my strategy. Your strategy might be different to mine. There's a lot of traders who've got different things, different strategies. The way they look at price is different. The way they understand the charts is different. So again, you'll have to see if this works for you or not. What it does is it's a really important tool, and it helps you identify the trend, what the market might be doing, what the market has done, and it usually tells you what's happening, whether the market is sold too much, i.e. oversold, or whether the market is bought too much, i.e. overbought. So you can use it as a reversal type of indicator. Again, your strategy needs to be in line with the indicator. So if you're using it as a reversal type of indicator, then your strategy will need to be like a reversal type of strategy. Again, there's different things that you can do with it, depending on whether when it's oversold, your strategy is a certain pattern or a certain type of strategy is telling you to buy. You can use that as RSI as an additional confidence to buy the market, and hopefully anticipate that it's going to work your way. Again, there's different things that you can use, like an RSI calculation. Like I was saying to you earlier, RSI is usually from 0 to 100. How it does is, obviously, if the formula is between that and it equals, what it does is it equals all the gains and it divides it by the average loss over a certain period, whether the price has gone down, whether the price has gone up. This is usually a 14-day period as well. So there's different things. For example, it calculates the price and it draws a line. I'll be showing you an example of that as well, and in that way it helps you calculate where the price could potentially be going next. Interpreting the RSI is quite simple. Again, it will need a bit of practice and a bit of knowledge, and hopefully after this video you'll have the knowledge to interpret or to explain or to analyze the RSI. What it does is a reading above, like I was saying to you earlier on, if there's a reading from 0 to 100, and if the reading is above a certain number, for instance 70, it indicates the currency pair is overbought, and it may be looking for a reversal or a correction. Again, on the other side, we have an a reading below 30. It suggests that the price is oversold and it could potentially bounce back and go up again. So over 70 is overbought and the price could go down, and below 30 is oversold and the price could bounce back up, meaning that the price could be going in the bullish scenario. So it could be making a reversal, it could be heading back up to where it fell down from. So this is really important, how the RSI works in trading, because it helps us to know, it lets us know that whether the price is overbought or the price is oversold. Again, there's different readings that you'll have to interpret the reading to know what's happening. And again, the line will show you where the price is at, and you can use that information in your trading to obviously be on the right side of the market. So when do we apply the RSI? We apply the RSI in our daily trading. We apply in various factors. We apply in line with our strategies. We apply it in the Forex market to basically increase our probability. It could be like an additional edge. So when we apply the RSI, we need, like I was saying to you earlier on, if the RSI we do it by identifying the overbought and oversold condition. So if the RSI is above the 70 level, the market is considered overbought and it could be going back down. I will be looking for sell. But if the price is below the 30 level, the market could be looking for a correction, suggesting that there may be a buy or they may be bouncing back up where they fell down from. We can use it to spot divergences as well. Divergences are, again, when the RSI says one thing but the charts are saying one thing. So for example, the RSI might be saying that it's oversold, but the charts on top or the bands or something else that we have is showing it's overbought. So we can use that as a divergence as well. Divergence is a bit more confusing compared to the overbought and oversold. So this is something that you'll get onto when you're on the advanced level. I'll be doing another video to explain the divergences and how do they work in Forex as well. But for now, we will stick to the basics and how it works, and the overbought and the oversold. And we can use that as also, like I was saying, we can use that as overbought and oversold. Again, there's RSI trend line break as well, and swing rejections. We can use that information. Again, it tells us through the peaks and the lows, indicating the price might be onto a possible reversal. And swing rejections, it usually involves the RSI forming a lower high, meaning that the price forms high and the low highs. We've done a video on that as well. And again, when the RSI is forming the lower highs, we can use that as a swing rejection to say that we were looking to swing the market, i.e. go the opposite way, and both of which signals could be potential reversals. So again, RSI is usually like a reversal type of indicator. It's not like your trend following indicator, for instance, like the moving average, which we've covered in the previous video. So it usually tells us where the market is about to stop, or where the market could stop and market could reverse. So this is what we need to understand. We can also combine the RSI with other indicators, different indicators like the MACD, depending on the type of indicator they use. We can combine it with moving averages as well. We can combine it with other things like trend lines and so on and so forth, support and resistance, to increase our probability in trading. There's different strategies as well that relate to the RSI. Like the divergence strategy, it involves different things. Divergence, like I've said to you earlier on, it tells you about the bearish divergence or the bullish divergence. So bearish divergence would be looking to we'd be looking for like selling divergences, and bullish divergence would be the buying divergences. And obviously what it does is it makes a high while the RSI is making a lower high. So it tells you the opposite information. So market will be going up like that, but the RSI will be going down like that. So we can use that as a divergence to again use that as a probability to be on the right side of the market. There's also overbought and oversold strategy. Like I've said to you earlier on, when the RSI moves above 70, it's overbought, and we can look for sells. And when it's below 30, we can look for buys because the RSI is oversold. There's RSI swing rejections as well. So like I've said to you, there's rejection. It basically swing is it's indicating a possible reversal, and how the market is moving. So it might be saying that the market RSI will be making a lower high, but the market will be making a higher high. So we can use that as a swing rejection, or the opposite of what the market is printing, to be to go against the market, again to be on the reversal side of the market. We can use RSI with the moving averages as well. Like I was saying to you earlier, this works great. Possibly it works great for me as well. And this is something that you guys will have to practice. So let's just say if the price is above the moving averages, meaning that the price is bullish, but the RSI is below 30, so it's saying that it's oversold. So now we can look for buys, and the opposite with that would be the price is overbought, i.e. above 70 level, like here, but the moving averages, again, they're below the price is below the moving average, so we can look for sells there, because obviously we've got two confirmations there. Again, it's all about confirmation and how we use RSI. We can use it with the MACD as well. MACD just tells us, again, MACD is basically like a type of signal indicator, and it tells you the overbought and oversold condition. So for example, you might look for the MACD line to cross above the signal line, which will indicate a bullish signal, and then the RSI falls below 30, meaning that the price is going up, so you can use that together to be in a bullish position or the bullish side of the market. Again, this will take a lot of practice, a lot of knowledge, so please come back to the slides if you're confused. If you have any questions, please drop them in the comments below. And the RSI typically looks like this. This is the RSI line. There's a moving average line there as well. As you can tell, there's a reading here, and when it goes above 70 it's overbought, when it goes below 30, so for example like that level there, it means it's oversold. So we can look for buys here and we can look for sells there. Hope that you guys have got the point. You've understood RSIs and you've gained a lot of knowledge about RSIs. If there's still any questions, please don't hesitate to obviously drop them in the comment section below. Coming on to the conclusion, with RSI traders can gain edge, but again there's no 100% guarantee, so please use proper risk management. I hope that you guys have learned a lot in this video. Please like, please subscribe to my channel, leave a comment below if you have any questions, and follow us on social media platforms like Instagram, Twitter and Facebook, because we are always active on there as well, and we might always drop valuable educational content that might be useful for you as well. So please stay tuned. Thank you so much for watching, and I hope to see you again in the next one.